Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really glad to have with me Nolan Watson. He is involved with the founding of Sandstorm Gold back in 2008, actually went public in 2009. Nolan has been the president, CEO, and a director of the company, has led the company's transformation from a small startup back in the day when I first met up with him into a diversified royalty company with a $1 billion market capitalization. Certainly, prior to Sandstorm, Nolan was the CFO of Silver Wheaton Corp., which, of course, is very well known to most hard money investors and mine share investors. Now it's Wheaton Precious Metals Corp. There he gained the experience he needed to make Sandstorm a reality and a success, and certainly it is on its way, I believe, to becoming quite a success story, which is why I'm really pleased to have Nolan with me. Thanks for joining me, Nolan.
Well, thanks for having me.
You know, it's really a pleasure to see your company grow as it has. I think I have the feeling that right now, it's been a long time since I've been following your company, but I have a feeling that right now should be a sweet spot for your company because it looks like there should be some very dramatic growth ahead, and I want to ask you about that. I should tell our listeners that your trade in Canada under the symbol SSL. You can buy it in New York, as I have, under the symbol SAND. 185 million shares. I see a 52-week high-low in Canadian currency between $6.95 and $4.62. And the company announced earnings of $700,000 in U.S. money during Q2. Nolan, before we get started discussing the very impressive portfolio and I think what looks like could be exponential growth right ahead in the next several years, perhaps you could just take a minute to tell our listeners, those that may not be familiar with streaming and royalty companies, why it's advantageous and less risky in many ways, and why those kinds of companies generally sell at higher multiples than regular straight mining companies sell at.
Yeah, I think for investors who have invested in exploration, development, and or operating mining companies, they have seen the pitfalls of doing so. Sometimes it can be rewarding, but there are a lot of risks inherent in it, and operating costs typically are higher than you expect, and production is sometimes a bit lower, and capital costs can sometimes overrun, and there can be floods, fires, there can be temporary blockages of the project, and during all of those periods of time, the mines go from what would otherwise be money-making enterprises to significant money-losing enterprises, and can catch investors off guard. Whereas a streaming and royalty company with a diversified portfolio, such as Sandstorm, we have 189 royalties around the world right now, that we're always collecting money, we're always getting money in, cash flow is always positive, and the portfolio numbers go up and down on any individual royalty, but we're just continually collecting checks all of the time. And so Sandstorm we're actually, I think, in our 8th, coming up on 9th year of record production every single year for 9 years. And so we're able to do that just by continuing to grow a diversified portfolio of royalties.
Yeah, and you don't have to put more money back into the projects as regular mining companies do. You mentioned if you have these disadvantageous events, a lot of times the companies have to ante up for more money, but you don't have to do that. You've already taken your position in the company by providing money that help these companies a lot of times get into production. So you mentioned you have 189 streaming and royalty assets, is that right?
That's correct, yeah.
And how many of those are now providing cash flow to you?
Yeah, so we have 20 of them already producing. We have a significant number of them under development right now, which is the reason that if Sandstorm makes no further acquisitions in the next several years, that we anticipate production growing 130% based solely on things that we have already acquired. And then we've got over 100 exploration royalties at various stages of exploration, and we're pretty excited about that part of the portfolio too.
This looks like the sweet spot for you because, I can remember the early days when I invested in Sandstorm. There wasn't an awful lot going on. I mean, there was a lot going on, but you were really building up your portfolio. And now you mentioned all these different projects. Not all of them are going to be successful, but a lot of them will be. And it's I guess the downside for me as one who looks and follows companies like yours is that to get involved or try to understand in each and every company, it's a daunting task. But you have quite a staff that helps you do that. That are experienced in this business and know how to analyze companies inside and out. And you do a lot of due diligence before you invest in companies. Can you tell our listeners what are your hurdles for investing? How do you determine to put money into an evolving gold or silver project?
Yeah, so we have a fairly thorough process that we take assets through before we're willing to invest in them. We've got an investment committee that has to approve things, and obviously a board of directors as well. But the core of that decision-making process really is, and it's part of the heart of Sandstorm, is our technical team. So we have a world-class geologists and engineers fully paid on staff who work with us here full-time. And all day long, they're just out there doing due diligence on things that our corporate development team has brought in and said, hey, is this something that we should invest in? And so that team is obviously going through and looking at a number of things, including quality of management and quality of ore body. And actually, we will reconstruct entire resources internally inside Sandstorm rather than just trust the 43-101 reports that other management teams put out. And that's actually one of the areas where we find a lot of discrepancies. We have our own metallurgical consultants that we use and send in. We've got our own underground mining engineers if it's an underground mine, and they'll go and assess the mining methods, and we'll reconstruct what we think the actual cost of production will be, and then we'll make a decision as to whether or not it's something that we invest in. But through that process, one of the key things, which is one of the differentiating factors of Sandstorm, is we are totally and completely uninterested in investing in anything that doesn't have a massive exploration upside. So we see a lot of our competitors trying to get deals where they think it's reasonable value given how much ore is there, even if no more ore is found, even when we don't think more ore will be found. And Sandstorm doesn't bid on those situations. We don't try to acquire those things. We're only looking for assets where we think the mine life can increase dramatically, so double, triple, quadruple, so on and so forth.
All right, Nolan, when I go to your website, you provide what you expect the number of ounces or gold equivalent ounces to be produced over the coming years. I think if I heard you correctly earlier, you said you are providing that guidance based on what you know you have right now, not all of those exploration potential you just talked about, which really could provide a lot of blue sky beyond what you're projecting. But even so, what you're projecting is pretty impressive. As I look at the numbers, I think something like 60,000 ounces this year is what you're projecting, 60,000 gold equivalent ounces, something around 70,000, I believe, between 2019 and 2021. But then 2022 to 2023, I would term it explosive growth to something like 140,000 ounces. What is in the pipeline right now that allows you to project that kind of growth?
Yeah, so that's an important distinction that you made there. If people go and download our investor presentation, I think you're referring to what would be slide 4, which is our production guidance. And you're correct. We assume zero exploration upside on that slide. This is all just baked in based on projects that are at advanced stages that we know definitively are going forward. We have a number of other royalties on projects that might be going forward in the very near future, and they are not included on this slide. So if they do go forward, then it'll be increased production. But the main things that are showing that growth between now and 2022, 2023 are a few things. One is a company called Equinox Gold. They are rebuilding a project called Orizona in Brazil. That's about 60% complete in construction. We did a deal also a few years ago with a company called Yamana on a large gold-silver mine that they have called Cerro Moro, and we have a large silver stream that comes off of that. That silver stream kicks in for us in 2019, so there's some growth in next year for us. And then one of our real significant growth factors is a 30% net profits interest that we have on a mine called Hod-Maden, and that's a large asset that we purchased last year, and it is, as far as I'm concerned, the coolest undeveloped gold mine in the world. It's an ore body that comes right to surface. It's 40 meters wide, and it's 13 grams gold equivalent on average over the entire 40 meters, and it runs several hundred meters deep into the earth, and they're going to be able to produce a significant amount of gold from that at an all-in sustaining cost of about $400 an ounce, which is unbelievable. I mean, I'm unaware of any other mine out there in the hands of a royalty company where they're producing gold, all in sustaining for under $400 an ounce.
It's hard to find anything. I must say, as I search for good investing opportunities in the mining space, it's unbelievable. It's hard to beat that. I think also I noticed that I think this makes sense. I read somewhere that you have more meters that will be drilled, exploration drilling, on your in the projects you're invested in than your peers or your other royalty companies. And I guess that's because, as you said a moment ago, you really look at stories not just for what they know they have now, but with great exploration potential. So your geologists are out there looking at something, I suppose, projects that have considerable scale and upside, right?
Well, exactly. For every dollar investors invest in Sandstorm, they get approximately double the meters drilled on our properties than any other streaming royalty company in the world. So the whole exploration thesis that I was talking about before, and us only investing in projects that have substantial exploration upside, that is proving out to be true just through the decisions that our partners are making about how many meters they want to drill on those properties. And so in 2017, for example, we had over 500,000 meters drilled on our properties, and in 2018 we're expecting a similar number, and which is one of the reasons why for the last 2 years straight, and we think this may be the third year straight, we've had more gold ounces found on our properties at $0 cost to Sandstorm than have been mined on our properties, meaning that investors who invested in us got all of the cash flow during the year that we received, and at the end of the year there were still more ounces on the books than there were at the beginning of the year, and that's in a declining gold price environment, and that's even after adjusting for gold price changes in resources. So it's a pretty impressive number.
Nolan, you're looking at some of the other maybe better known streaming and royalty companies. Sandstorm seems to be selling at a lower multiple than some of those other companies. Do you attribute that in part to the fact that you're smaller and less well known, or could there be some other factors involved? And how do you think that's going to resolve itself? How do you think the market's going to start to recognize the value that is implicit here and the growth that we see coming?
Yeah, I think there are a couple of reasons. Obviously, we are smaller, and so we're can't be bought by some of the huge multi-billion-dollar large generalist funds that need to invest $100 million at a time. So that would be one reason, but I really think the main reason is that if you actually do an analysis, a correlation between the trading multiple of a royalty company and the percentage of their portfolio that is currently in production in terms of NAV, like what percent of their NAV is producing today, and you run a regression, the R squared is almost 0.8, which is as close to a perfect correlation as you're going to get. And investors, especially institutional investors, unfortunately are very short-term oriented, and they don't care what your production is going to be 3 years from now. They care what your production is going to be next quarter. And so out of all the major streaming and royalty companies in the world, including Sandstorm has the smallest percentage of our NAV currently in production. So whereas Franco-Nevada would be 80%, we'd be around 37%. And so if we fast forward 4 years, we will have about 80% of our NAV in production. So sometimes I joke and I say the best thing that Sandstorm could do is sit here on our hands for 4 years, do absolutely nothing, and watch our share price double or triple. Having said that, we will continue to grow, but we are cognizant of the fact that if we're patient, the trading multiple will come.
You will continue to grow. You rather enjoy seeing markets like this in which, cooler markets for the gold and silver mining companies, because that provides more opportunities to pick up assets, right? And if that's still your thinking, how well funded are you to do so? Yeah,
so we're right now one of the only streaming royalty companies in the world that's debt-free, but we do have a $150 million undrawn revolving line of credit, and our banks have told us that we can increase that size of line of credit if we want to based on our cash flow profile. And so that's available to be drawn on 24 hours notice, and we can go out and make acquisitions with it, and we do plan on doing that. And we also have, obviously, a significant amount of cash flow coming in on a weekly basis here, and we can use that to continue to grow as well. One of the competing things for growth decisions is share buybacks. So we believe our share price is so undervalued, we have been buying back our shares. It was only mid last year when our share count was around 189 million shares, and we've been buying back shares, and we're down to, I think, 184 million shares as at today. So there are very few mining companies in the world that I'm aware of that are actively buying back material amounts of their own stock.
Interesting, and you're doing it without borrowing money, because so much of the share buybacks, I'm told at least, is happening from companies that borrow money, given the low interest rates, still low interest rates, and then go out and indebt their company, jack their share price up, and maybe some of those guys are just possibly exercising their options, huh? I suppose
we definitely are doing it just from cash flow.
Sinister side of me suggests that may be going on. I guess in the last minute or two that we have left here, the hot mat, and it's just an amazing story, as you say. Turkey, though, it seems to be some concerns about political risk at this point in time. What are your thoughts about that?
Well, I guess the challenge that they're having right now is a significant devaluation of their currency, which makes the cost of operating denominated in U.S. dollars much cheaper. So the project is making the same progress it was anticipated to make for dramatically less dollars. The capex will be lower because of that. So from an actual cost out the door, it's a pretty good thing. There are some people out there who are, leery of the current regime. I'm not particularly one of them, at least from a business perspective. The new Minister of Finance, which the international community had a challenge with because it's Erdogan's son-in-law, his job before going into government was CEO of our partner company. So our partner company is very well tied into the government, and we don't really see the political risk as it relates to Hod Maden the way it might apply to other companies or other things.
I have to think that may be one of the things that is holding your share price down a little bit, but who knows for sure. But it's really an exciting story. I must say, I think this is one that I want to highlight a little bit more in my newsletter for my subscribers as well, because of the virtues of the lower risk at a time when the market hasn't yet really caught on to the kind of growth profile that seems to be in the future for you. And is there anything else you'd like to add before we conclude our discussion today?
No, I think that's the key. I'm just excited for the first time in Sandstorm's history to be in a place where we have both massive growth and significant cash flow and diversification, and be buying back our own shares and be buying other royalties. So it's a fun time.
It is a fun time. Thank you, Nolan, for being with us. We're very thankful that you spent the time to explain this story to my listeners and to my subscribers as well. Thank you very much. We'll look to do it again sometime, hopefully.
Well, sounds good. Thanks, Jay.